Hey traders, Raghee here. Let's get a quick, I think we're good in the free trading room. Audio and video good to go. Great to see everybody on the YouTube. I hope everyone is doing well. All right, welcome to Charts and Coffee. We're taking a look at this Thursday's action here, and I thought we'd start with a quick peek at the economic calendar. If you haven't been checking out the economic calendar, gang, we have two of them that I would recommend making a quick pit stop at. First is Forex Factory. And the reason I'm going to recommend the second one is for some of the FOMC events that we will see sprinkled throughout the week. And you'll notice here, Thursday, March 2, our weekly unemployment claims. We do have ECB monetary policy meeting minutes. ECB is the second most important central bank we need to keep an eye on, especially when we're looking at the US dollar, because the euro is going to move based on what it is the ECB is communicating about the economy and ultimately about monetary policy. If the euro moves higher, dollar moves lower, and those are things that we need to keep an eye on. We have two FOMC speakers, but they'll be at and after the close, so really more probably going to affect, obviously the Asian session, maybe Friday's trading session where we have ISM services, FOMC member Logan, and a pretty interesting couple of days on the heels of yesterday's ISM manufacturing report. Ultimately, all of this data can most succinctly and frankly accurately be understood through the reason we're looking at all that stuff to begin with. And the reason that we're looking at all this data and whatever the FOMC is saying is because we want to know, where are they taking rates? When are they going to stop hiking? And then when are they going to start cutting? And those are the three questions we're always asking. Where are they taking rates in terms of that peak rate? When is that likely to be reached? When are we going to stop seeing the hikes? And then fast forward, when do we expect the first cut? And it still seems to be, if we head out into June, it looks to be June, July. Now, what's interesting is, if you're wondering, Ron, why have equities been under pressure? It's, in my opinion, never the data. It's what the data then suggests the Federal Reserve is most likely to do. We have now pushed out to a possibility, not a probability, but we have now pushed out to a possibility of yet another quarter point hike and this is the month of July, gang. So we could end up peaking in June, sure, or we could end up peaking in July. Peaking in June would have us at 5.25% to 5.5%. Peaking in July could have us at 5.5% to 5.75%. Equities are not going to like that. Bond yields are going to continue to strengthen, and equities are going to continue to be a little weaker. I don't mean weak as in brand new lows and here comes the flush sort of thing. Not at all. I just mean that within this very large range that we are in, we could start to push the lower end of, and we'll talk about the ranges in a moment, but we could start to talk about that. All right. So let's then move to, when do we possibly cut? All right. It all depends on where we peak, right? In order to understand what any of this means, we need to know what that peak rate ultimately is. It's not looking like we're going to see a cut in 2023 because November and December were at one point where we could see that rate cut. Ultimately now, it's looking more like that's going to push out to 2024. And again, it's not as big a deal that we might move out a few more months. What the big deal is where do we stop seeing rates going higher? when, as in which meeting, does that finally happen? And then we can move on to the third piece, which is the cuts. All right. So right now, equities being kind of in a bad mood make perfect sense when we look at a rate of change in terms of target rate probabilities. So we don't have to worry about what an ISM number means. That's really difficult. We just need to know when it's coming out and what it does here. And this is the easiest way to decode macro. Really, anything regarding macro that doesn't focus on this is just not what anybody really cares about. We could have cocktail party discussions about macro, or we could have the kind of macro that we know is moving the market. And this is the easiest way to do it. So I hope that makes sense. It's very easy, right? Why wouldn't people talk like this from the perspective of making macro easy? Well, think about it, right? They don't necessarily out there, financial media, want you to be able to do it yourself, right? It reminds me of why tennis has that odd scoring, because they wanted people not to understand the scores. It was a very elitist thing. Well, I think financial media can be that way too. So that's why I think there are easier ways to do it. Let's follow the data. Let's use rate of change. It's the easiest way to measure it. So I hope that helps. Really, really simplified macro. All right. So next up is right on back to my second favorite economic calendar, which is worth keeping on your bookmarks. If for no other reason than sometimes it's going to have FOMC speaking events that won't be listed on Forex Factory. So it makes sense to take a quick look here. You'll see Logan Bostic Barkin, right? So sometimes some of these events won't be on Forex Factory, right? Notice how we don't have those other two events here on Forex Factory, but they are here on Trading Economics. So tomorrow at 11, tomorrow 11 and 11:45, we have Logan and Bostic. And Bostic has been moving the market. Definitely want to keep an eye on that as we we basically wind down the first week of March. And we know what Bostic did earlier in our late February last week. So heads up for that one tomorrow. But we'll talk about that when I see you for Charts and Coffee. All right. So let's see. Bobby the Noob said level 2.2. That's great, Bobby. The scale of the chart says current target rate 4.5 to 4 3/4. Are those basis points? Correct. Yes. When they have the BPS, that means basis points. You got it. Now, the current simply means that's where we are now, for those of you that are wondering what Bobby's asking. And correct. That is the basis points. You got it. All right. Question from the free trading room. Yeah, let's jump on over to the chart, shall we? All right. Question from the free trading room. Good morning. Hey there, Ann. Now that Tesla's investor day has passed, would I briefly review my recent video? Sure. Thanks, Ann. All right. Yeah, let's take a look at that. Okay. So Tesla, what I wanted out of this investor day meeting was weakness. Right? We know it's a catalyst for more intense opinion, and what we would have liked to have seen is even more weakness, frankly, than we saw. We could have easily had a reversion to the mean, a mean reversion to the 34 EMA wave. That would have been great. Or let's jump on over to the DPMRs. The other thing I was looking at is for the DPMRs to sink into, you can see right in here, sink into the weakness of support, right? Sink into support. We want the weakness, and that would sink into support. I haven't got that yet. However, one of the things that I mentioned was that area around 200 as an aggressive level to consider, and I'm still fine with that. However, every single day, the daily price movement ranges look at the volatility of Monday versus Tuesday, Tuesday versus Wednesday, etc. Every day, Monday, Tuesday, Wednesday, Thursday, Friday, has its own volatility patterns, its own volatility behavior. And so that's why these update ever so subtly every single day. Monday's behavior is not necessarily the same price movement range as Tuesday. And by the way, that's also why these, whether that be HPMRs, which are for day trading, or DPMRs, which are for swing trading. That's the difference, by the way, gang. What type of trading style are you trying to master, the DPMRs have to be updated about every 4 or 5 weeks, while the HPMRs are about every 2-3 weeks, or depending on the contraction and the expansion of volatility, which is something that both Lorna and I are constantly monitoring. So it does require, hey, has volatility contracted or expanded? And then that gets calculated into the algorithm that projects those high and low ranges. And I don't mean to say algorithm to be all fancy. It just is math. It's just math. So yeah, and I want to look for a low that I can buy into. Same thing goes for XLY. I want a low that I can buy into. Now, since we're talking about XLY, and let's go take a look at the multi-chart of all the high concentration weighted stocks within the consumer discretionary sector. And is there relative outperformance? Tesla is the relative outperformer on the daily time frame. I would also keep an eye on McDonald's around 200 and GM. I'd keep an eye on GM as well. Not the same quality in terms of trend that Tesla is, but McDonald's and GM. I just finished watching Coming to America. Who remembers that movie? Eddie Murphy, Arsenio Hall. Every time I see McDonald's, I want to say McDowell's. Who here feels me? I'm totally dating myself. So anyway, I would keep an eye on the 200 on both McDonald's and General Motors as well. But yeah, the one thing that those two have better than Tesla is they are north of the equator. They aren't the price actions established above that level. So in some ways, they are more bullish than the uptrend that we're seeing on Tesla that's running into that 200. So keep that in mind. It's an interesting contrast in structure and levels. But I do like, for sure, the pullback buy in Tesla. We can keep an eye on McDonald's support at the 200. That might be worth definitely keeping an eye on. And then GE. Or sorry, which G was it? GE or GM? I know we've been looking at both. I think it was GM, not GE, GM. GE, by the way, is in an uptrend. So if you were looking for dips to buy, keep an eye on General Electric. Yeah, so I'd keep an eye on this, on GM as well. Okay, thanks for the question, Ann. I appreciate it. I hope that gives you something to work with there. Great. So again, remember that the idea is not to be a buyer at new highs, but the idea is let's use this volatility event to see the lower lows and then buy into support within the context of an uptrend. And if you caught that video at the Simpler Trading YouTube channel, you saw what those zones were that I was looking at going into this investor meeting where we wanted to see weakness. I wasn't making a play on the weakness. I wanted to see weakness so we could buy into it. All right. First question from our YouTube channel. All right. Hey there, David. Coffee dominator. Yes, caffeinate and dominate. I respect the trend that was. When a green trend switches to neutral, what variables shift in my bias from buy the pullback to sit and wait for clarity? David, I don't mind an uptrend going sideways. I don't mind a green trend going neutral. I don't mind that. What changes is that I will do two things. One, I will usually tighten the stop if I entered with the pullback of the uptrend. And two, the next trade will still be to the long side. It will still be bullish directional bias, but it will be set up based on not a mean reversion, buy the dip, surf the wave kind of thing. It will be based on oversold support, using a slow stochastic, using Darvis, using support as a fade. So it's still directionally the same, but the strategy is going to now be an oversold buy more so than a retracement or a reversion buy. And so it's subtle, but it is a different set of tools that we'll use when that shift, and it's going to happen, right? Of course, when that shift happens. Hey there, Stacy. What was my opinion on the new member Jefferson? My interpretation was hawkish, but others taught dovish. Stacy, I think everything we're seeing. And by the way, Stacy, I did get the envelope from you. I will be sure to reach out to you. Thank you very much for that. I wanted to make sure I said it was very kind of you. So I did get that. I want to mention that. The office let me know it arrived. So my interpretation would be more I don't want to listen to what they're saying. I really don't. What I want to do is watch how the market is interpreting what they're saying. And I would say generally things are hawkish. Yeah, things are just leaning hawkish. I agree with you. I really didn't know what to make of whatever Jefferson said, because a lot of stuff can be taken out of context, and a lot of things have to be put into the context of where target rate probabilities are now, and whether or not members like Bostic basically talked what the target rate probabilities were suggesting. But the target rate probabilities are suggesting a more hawkish outcome. And so therefore he sounded hawkish, but he was really only reflecting what was already there. So it's a tricky thing. I just look at those rate of changes of that data we talked about. Great question. Thank you very much. All right. Let's take a look. I got a question about some SPX. Sure. I don't know if we're going to have an SPX example. We'll definitely talk about S&P in the webinar that's coming up. By the way, if you don't know, on March 8th, we have a webinar coming up. Some of you caught the one we did last week. March 8th, we have another webinar. By the way, I get this question a lot. Raghee, is it the same presentation? No, I would hate to have to do the same thing again. It's going to be on the same topic, short-term swing trades. We're going to talk about new examples. I'm going to talk about some of the shifts that we continue to make from February to March. It's going to be up to date with some of the things that I'm noting. Absolutely not. So it'll be a brand new webinar. You can register for that. simplertrading.com/clear. We're going to talk about not day trading right now. We're going to talk about short-term swing trades. How can we be in positions overnight for days to maybe a week, maybe longer? But in this macroeconomic environment where things seem to be shifting pretty swiftly, and follow through is not that longer term time horizon that we enjoyed in previous years, what do we do? Is this environment tradable? It is. It absolutely is. But the shift that I'm making and continue to make, we're going to talk about that. What are the things that we've learned? What are the things that are working? And how am I using volatility? Of course, right? Okay, so anyways, that's the 8th, next Wednesday, 8 p.m. Eastern, 7 p.m. Central. I'm sure, I don't know what time it is in, Jamaica, but I wish we were doing the webinar there. Wouldn't that be great? All right. So anyway, simplertrading.com/clear. All right. SPX. Yeah, I get some questions on SPX from time to time. And always structure first, gang. So I'm going to start with the things most of you know me for. What is the wave doing? What are grab candles doing? Things like that. And then once we get a feel for structure, we'll move on over to what volatility is telling us. And this is where I do love having a point on the chart where I know it's time to act. Until we get to this level, or until we get down to this level, there's very little for me to have to do. I say have to do. I don't have to do anything until the clarity is there that compelling enough for us to put our capital at risk, right? We manage risk. So what about longer term daily price movement range? I'm waiting for prices either to get there for a short or down to here for a buy. I will say the buy is what I'm favoring because we have a yellow trend. That means yellow neutral. And then take a look at the slow stow. It's down near the low, right? It's down near the low. This is a 21K 3D slow stochastic. So it looks a little different because it's just easier for these eyes to see, but it's a 21K 3D slow stochastic, and it is oversold, which is actually support. So yeah, I would favor a buy if we can get down to support and set that up. And then that would extend also to the ES, would extend also to the MES. Absolutely. All right. Another question here coming in is CRM. What is Salesforce up to? Sure. Salesforce, let's talk about it from a structural standpoint. What's the trend? It was up. And this kind of goes back to David's question earlier about trends transitioning. So here's an uptrend. You see that? And then here is sort of, the neutral, right? There's that transition right in there. Ultimately, what we want to remember is that we want to keep with the overall bullish bias. So I'll start setting up more of a oversold, slow stochastic, neutral environment, maybe Darvis support, and look for more upside. Okay. All right. Last question for the morning. Stone Castle Project asks, do I strictly trade on one time frame? I often get confused when the daily versus hourly show conflicting signals. For example, APD. All right. So yeah, great question. It's a perfect way to end the morning. There are, for the most part, I have spent the last few years focusing on 5-minute time frames for day trading only, where I'm going to be flat by the end of the day. That's it, right? Daily time frames are for overnight swings. Weekly time frame for my position portfolio, months and months and months in terms of what I would expect to be in that position for, right? So one, I'm flat by the end of the day. That daily, I'm in for days to weeks. And that monthly is basically my portfolio. Okay. 2022 to 2023, especially mid-year, about June, the follow through that we had seen in 2021 and 20, it was already starting to evaporate. And then while we did get some overnight opportunities, we didn't see these great reversions to the mean on the daily like I needed. So I needed another level automated so that we could see the zone stair stepping up and down with trends. Find another way to find support and resistance that wasn't quite as, say, conservative as the wave or even some of my Darvis levels. While I still love them, I needed something else to see the levels that I could act on, and I needed to automate them. So the DPMR on the 1 hour, became the adjustment that we made. What does that do? It's very slow. It's not day trading, right? It's not day trading. It is likely going to take me overnight, but I'm likely also going to be in that position for maybe a few days, maybe a week, maybe a little bit more, maybe, as opposed to daily, where my commitment, my time horizon is far longer. And we know that's not necessarily been working out really great, right? So what do we know? We need to find a way to tighten our risk, tighten our targets. And one of the easiest ways to make that adjustment and automate everything is also tighten our time frame, but not day trade, right? So that's the way that I look at that. I hope that's helpful. I'm looking forward to talking a lot more about this next Wednesday. I will discuss timeframes. I will discuss tactics, what is working right now. simpletrading.com/clear. Thank you as always for the questions, gang. I'll see you tomorrow. Same time, same station. Be good to each other.